Good morning. Okay, so I want to make this recording a bit about investing because, and specifically at this time, there's a lot of hype about investing, and I mean investing money in the stock exchange, and in my case specifically the New York Stock Exchange. Now, the hype is that in some automatic way you make enormous gains, and fact is, right now, after about 6 months, I'm pretty much below where I started. So the question might be, why would you invest? Did I not foresee the possibility of losses, or things going pear-shaped? Well, actually I did, and I considered that very seriously. But the position that I'm in is, for one, I don't have any access to any state-sponsored pension. I'm a South African, and it has been quite clear my whole life that when I grew old, there would be no state-sponsored pension, and that's it. So I put away something. I have been putting away something for the last 40 years, and slowly but surely this accumulates to some extent. And then what do you do with it? Firstly, in South Africa at the moment, the financial climate is very risky. Fact is, chances are that your nest egg could be looted. So you have to get your money out of here, if you have any. So about 5 years ago, I shipped off what for me was a fairly large bucket of money to the United States, well, in US dollars anyway, and there it sat. The problem with that is that the interest rates for the last 5 years have been very low, in fact zero in my case. So you may realize some gains on the currency exchanges, but your offshore holdings are simply not growing if you just leave them there in cash. They're not even growing 1%. So then I asked myself, what can we do about it? Well, of course, there's the stock market. Now, I am very risk averse when it comes to the stock market, because I realize there's a huge amount of hype going on there, and so you have to make a choice. Do you want to go into what are called growth stocks, the Amazons, the Facebooks, all of these stocks that have been going gangbusters on the stock exchange? Or do you approach this from a point of view that I want to have a built-in safety net where I'm getting an actual return that means a dividend? So the first thing I did was, of course, like everyone else, I went to Warren Buffett, and I had a look and see what he said. And fair enough, he said, a good dividend share is General Motors. And at first I was going to put a huge big lump into General Motors, but various things happened, and eventually I only put in about 1/5 of my total investing amount into General Motors, because by the time I managed to get into them, things were a little bit not so certain anymore, and I'd gained a bit more insight. And I put the rest, 4/5, into AT&T telecoms. Both of them were a relatively beaten down stock at the time, especially AT&T. And why did I go into them? Well, okay, firstly it's the dividends at 4% for General Motors and at 6+% for AT&T. And their price to earnings ratio was fairly good, at about 6, 7, 8% price to earnings ratio. So no matter what happens to the stock exchange, I've been waiting for a crash for a long time. I've been expecting a crash for a long time. But if the underlying companies are steady and solid, they'll carry on paying their dividends while things are getting pretty bad otherwise in the stock market. Now, this has happened in the last week or two, and there seems to be no problem with the dividends continuing. So although my initial investment is lower than what I started off with in the cash amount, I'm still getting the dividends. And I'm a buy and hold person in this case. I have no intention of cashing in. So as far as I'm concerned, they can sit and languish for a year, maybe 2 years, before I'll, or maybe more, before I'll actually need the underlying cash. So during that period of time, things will be, should be okay if they carry on paying dividends. And so it's basically an interest-bearing account. And I should avoid, although it's very hard for me to avoid looking at the actual day-to-day price on the stock exchange, because it's not good for your blood pressure, shall we say. Now, why has GM come upon hard times? Well, essentially they've made a big push into China to manufacture in China, and due to tariffs and other issues, the new vehicle market in China has come down substantially, and so that's had an effect on the tariffs, and the new car market in China has diminished. So that's had a bad effect on the General Motors shares. But the underlying company is still a very solid company that has got a very bright future in autonomous self-driving cars, which to all intents and purposes is ahead of the hype of Tesla, for instance. And I'm glad I haven't touched Tesla, because it just struck me as being a very hyped up company, even though old Elon Musk is or was a South African. But I still see it as a risky stock to hold, and that has been borne out. I mean, I'm down on the GMs, maybe 10%. On the AT&Ts, I'm about break even, but I have been paid dividends there already, so I might be a little bit ahead even. Going into the AT&T, they've recently bought over Warner Brothers, Warner Media, and they're waiting for various legal things to come through. But it seems to me, and their earnings are coming out fairly soon, that they are doing okay and pretty well. They a big force in the 5G rollout in the United States, So both of the shares have a possibly a bright future, but not looking so good now. Well, time will tell, but I'm glad I've made this recording, because I'll make another one when things change, if they do change, and I'll have this to look back on and to say, well, that's how it looked then, and this is how it looks now. But I hope my logic, which is probably more got more depth than what I've been able to articulate here, I hope it pans out, because I've done a lot of research. And by the way, the GM shares were Warren Buffett's suggestion, so, well, what can you say? I went his way on the GMs, and I went my own way on the AT&Ts. But nevertheless, I took his advice when I didn't have my own opinions really to run on. Okay, thanks for watching. Don't forget to like or dislike. I don't think there's a dislike.